Hello and welcome traders at this educational video. This is gonna be a very important video for you because I will be giving some time at the beginning to the liquidity, what actually liquidity is and why it's so important for the trading, and then we will move to the Tradingdifferent tool, as I will be showing you examples here so you can see how it works. So why is the liquidity very important for you? Each market, most of the markets in the world actually operates on, yes, you have technical analysis, which is driven by fundamentals and general flows, which you can learn pretty fast, right? If you give it enough time. But you also have the order flow, which we monitor with Exocharts. And then we have the order books, which we monitor with TRDR and Tradinglite. Also, the order books are very important. They complement each other. That's why I'm making you a lot of examples in the video, in the group, where we are watching when we are taking out liquidity from the people, if we actually have the walls there, if you have some big limits there. So order books and liquidity are, you need to use them together. It's very hard to use it just alone, yeah. And so, yeah, and the liquidity is the third most important thing. So if you know all these things together, you can be consistent and profitable trader, and you will literally X-ray the market. So what is liquidity? When someone opens new position, for example, we are here, someone is opening 100,000 dollar long, he is going long, so we can see that in order flow in Exocharts, and he's increasing open interest by this $100,000. Liquidity, why it's working so well in these markets in crypto, because these markets are heavily over leveraged. Most people trade very crazy leverage. They trade like 10, 25, 50x thresholds. They want to big money. They want to make quick money fast. That's why it's exploited here heavily, and you really need to know this. So when someone is increasing open interest, and when many people do that at the same area or at the same time, we have, we have now estimates. We can know for sure, but these tools we are using are very precise, pretty precise, I would say. They are doing estimates for their liquidation threshold. So if someone opens here with 10x leverage, where is his liquidation for 10x leverage, 25x leverage? The more aggressive leverage, the closer liquidation we will get to that person. And it's also calculating the stop loss of these people. So it's like combined together. And that is what we call liquidity, because liquidity can mean other stuff. Yeah? It can be also like order book depth in the order book depths. Yeah, so you have a lot of like orders in the order books. But if we are speaking about taking out liquidity in the group, that's what we mean. Yeah, so when you stop out people or when you liquidate people, and you pretty much know you are taking the liquidity, because you, for example, are watching order flow, you are seeing very massive, like exhaustive moves where a lot of volume is coming in. For example, this is just one example. I will be showing you exact examples. So many people went long here, and now you are going under these lows. You know these textbook rules where most people in the world, 95% of people, they are educated to put stop loss behind the pivotal highs, pivotal lows, where was the high, like from market structure point of view, where you need to have the stop loss, yeah, because you will, for example, if you take out this low, then it's very likely you will continue downtrend. All these retail textbooks are telling you to do that. But as soon as you understand and learn liquidity, you will actually can utilize the pain of these people for your new positions. And instead of you having stop loss there, you will have opportunity there on other people's stop losses. That's the institutional market maker thinking, or just big trader thinking. Wells, that's what they are doing. What's the reason they are doing that? The one of the reason is, and it's pretty key reason is, for example, you had a lot of people going long in this small range here, and now with moving under this low, these people will have liquidation under that low. They are trying to over leverage, move to the upside, so a lot of people under lows or normal stop losses. You see what we did swing failure pattern here and pushed up. The big traders, market makers, and whales or big institutions, all these people together, they have the limit orders lined up. This is now when the order books step in. You need to watch order books if you actually have enough limit walls to hold us here. it will tell you if it's likely we will create swing failure pattern or not. And you also need to watch the open interest build up with this tool, so we can estimate, like I'm doing a lot of videos on this as well, so we can see what is the build up of the open interest, what is the potential to create a swing failure pattern and take liquidity pretty fast, or you will do breakdown. Yeah, so that's like different. And the main advantage of these people is if they line up enough limits here, they know most retail and most small traders will get stopped out moving here. They will so if they are long, they will be forced to sell positions. Yeah, it's always opposite of the current position you have open. So you'll be forced to close only to fill this big traders position. And the main benefits for them, of course, they are grouping together, so they are trying to hold the market. Remember, the limit orders in the market are always stronger hand in the market most of the time. They are the absorbers. They are setting the boundaries. Yes, the market orders are moving the market. They are less patient part of the marketplace. But the stronger hand in the market are limits. That's why if you are a really good trader, in the end you will be utilizing limit orders as well with these people. Yeah, where you are anticipating and predicting reversal points thanks to liquidity from smaller traders and their pain. The main benefit of this is you also save on the fees, because the larger you are, yeah, if you fill positions here from these people, the larger you are, the limit orders on most exchanges are filled for free. So you save thousands of or 10,000s or even millions of dollars on fees if you do that. Plus they are, they are calculating these people liquidity. They are also using tools as us. It's pretty similar. So they know they pretty much get guaranteed fills. Yes, because when many people getting liquidated at once or stopped out, they are causing exhaustive price action. Yeah, the volume spikes. So it's so easy to fill even big positions. It's hard for the big traders to fill big position and don't move market. The order books are not so thick in the crypto. This is not stock market, trillion market caps. This is still small market cap compared to other markets, and utilizing limits, and as I said, other advantage, other important aspect why liquidity is working so well here and why it's actually easier to trade here than traditional markets. Because these markets are super heavily over leveraged. Most people, they are just here for they're trying to make one big trade and make it. Yes, they are using 10, 25, 50x leverage, some crazy leverages, They don't understand that trading is is not sprint, it's marathon. Yeah, you need to be consistent and trade after trade, build your account. It's not like you can't bet on 1 or 2 or 3 trades and liquidate yourself. But most people do it here. It's just, that's how it is in crypto. And until we have so much leverage in the system, we will be utilizing the liquidity in the system. Let me check my notes here, which I made in the Discord, so I don't forget anything. Prices will move in ways that benefit the minority at the expense of majority. So yes, this is important. So with knowing liquidity, you are going from uninformed majority to very well informed minority, because you can exploit most of these people and you have the advantage. Yes, this is the leverage I covered. Yeah. Yes, we pretty much covered what is the liquidity. So now I will be showing you the examples. Very important stuff. Some people can actually, even without anything, you can really estimate there will be liquidity, above this high, about all the pivotal highs. But we need to know exactly, especially if you are a scalper or day trader, you want to see more exact. And it's usually node, it's not like exact area. So it's like node, and you want to see where is the potential, where the liquidity. And so let me show you some examples. I will be showing you how I actually chart liquidity. I do it from the hyblock and from the Tradingdifferent. Here is because you can also chart the liquidity, especially the medium time frame one, which is like above the 30-minute time frame and higher. I'll be showing you the previous charting, and then I will be showing you more examples directly in the Tradingdifferent, so you can see how it works. So you see, we were ranging in this top here a bit, and you see we created the medium liquidity node. I mark medium liquidity nodes, where is like more scattered stop losses and liquidations of the people. And the major liquidity is where is the most, where is very likely we actually get the wick and the most volume in, and it's gonna be the most exhaustive. So always be aware of that. That's how I do it for myself, where I expect the strongest reaction and where I better be around. You see what happened here after this range here? We took the major medium liquidity node. There was bounce, and in the end there was weak to the dollar, and we took all the major liquidity from the people. You stopped out all these longs here. And also the shorts are seeing that as well. They also have the access to the liquidity too. So they are taking profit. When you are taking liquidity, is not just this is not just liquidity from open interest is declining from the longs. Of course, oftentimes we see the open interest declining from the shorts here as well. Yeah, so they take and they also switch to the positions. And if you're a proper trader, you just trade both ways. Look what that happened here. We were building this liquidity node here. And you see what happened. We run it and then bounce. You see how it's becoming a major confluence for you. Now since this range here, this was like all the liquidity. Yeah, market also built liquidity from higher. That's when your liquidity nodes are combined from the local timeframes also, and then with the higher timeframe nodes. But from these people, it's not so much like liquidations. It's gonna be more like stop losses. Yes, it's the bigger time frame moves you get, the less liquidity like the liquidation nodes plays a role. It's more like stop losses. Yeah. So you see this, we were prepared for this also really well, and you see what happened. Market very violently ran most of the medium liquidity node, stopped, and then we've got another final, like rest of the liquidity was grabbed, and then we started to do major time frame reversals. Yes, and you see I'm ready for the future. I have all the nodes ready. I know the pain from these people, all the pain here. And really this, if you understand liquidity, you will, instead of stop loss you will be hunting for opportunities when we are running the liquidity. That's how it is. You will be exploiting other people's pain. That's just the fact, and this is happening on all the markets in the world. Not many people are lucky to be educated so well on the market. Yeah. Okay, so I told you what is liquidity, and I showed you examples in my charting. But now let's go to the new tool so I can show you the great utilization of it. Okay. So let's go to our tool over here. So it's called Tradingdifferent. One advice, I have this set on 100. This is filtering out for me the really very aggressive and small nodes, and it's just showing me higher, it's like grouping higher and bigger volume nodes. So I don't see these little liquidities in these small ranges. You see I have nothing here, but once it becomes worthy, it's gonna show on my chart like it was here. Yeah. You have two options here. You can do scalping. This is great if you are like scalper and day trader. Always use Binance. Binance creates over 20% of volume, so you don't need to bother with other exchanges much. Binance is the king for now, and that makes trading for us easier, especially on liquidity. So this pair here. If you want a bigger time frame, then I will be showing you also the swing time frame. This is just this is today example. So you see we are ranging. So the liquidity, this tool is especially suitable for when we are ranging and when you want to estimate the swing failure pattern liquidity. So you will take just enough to damage a lot of people, but you will not do like breakout like we did later. Yeah. So this node actually was red here. It's these colors represent the how much volume was like already collected together. So if you see yellow and red, this means it's now becoming medium to high liquidity with a lot of volume and potential people to stop out. Yeah. So I personally pay attention with these settings to yellow and red nodes. So you see we are ranging in this range, and now we have this was the previous day Asia high. And if we want to do swing failure pattern, that's exactly what we need to do. We need to take out this was red node, because now we build more liquidity, so it become yellow. It's like not calculating it now because it was taken. But you see, if you want to do swing failure pattern, you better stop here. You don't want to push over, because you see what happened when we pushed over. We actually overextended move a lot, and we went for other liquidity. So this was the swing failure pattern liquidity. Same liquidity is waiting to the downside. If we want really great swing failure pattern, we will be stopping here at 28,430. We don't want to cascade lower, yeah. But it's also how, you know, you have other factors, how long you are developing the range, because the longer the range goes, you know, your chances are slightly dropping. There will be no swing failure pattern if there is not enough orders in the order book. So you need to watch the order books if there is enough to capture all these people. What is like ideal for, because now you are building these three, look at here, 1, 2, 3, 4. You are building all these higher lows, and they can easily, these people can cascade into each other and overextend to the downside. So it's like ideal when you do like 1, 2, you go out down, and now you do this swing failure pattern here, and now you bounce. So the more liquidity and open interest you see in build up, then yeah, you need to monitor these factors. And if you don't do swing failure pattern here, you know what is the max pain to go. Actually, you will go, it's very likely you go to 27,900 or to this node. You will be watching this node as a whole, yeah? Okay, sometimes, let me show you here. This is a good example. We need to zoom in. It's looking now a bit different than it's developing because it compares to what is on your screen. Yeah, always remember that. You need to zoom in to see. Yesterday we had massive drop down. We were going over all the liquidity nodes, and then we have the big bounce, and you see what happened on the bounce. We took from these shorts here, we took a lot of liquidity. It's still just, you know, blue and green because not enough time passed, and not enough open interest was, you know, like, you know, open interest was not rising so much. But you see how you took all these people out. Now you are stopping. Why? Because if you have not enough liquidity above you, the chances of you to stop are increasing, because, you know, this was easy for the markets. I was watching this live. If you trade enough, you are seeing that like a lot of orders, a lot of buy orders are coming, open interest is going down. You see how people are like cascading into each other. So other people liquidations and stop losses fuel other people liquidations and stop losses. That's why sometimes you can have these crazy moves when they cascade into each other. Yeah? But you see, we stopped here because there was not enough liquidity to push over. So yeah, market find the top, and it's also confluence for you to take profit and look for short, for example, right? I have this screenshot here ready, so you can see I was writing you as well. So before we were pushing heavily up, then we went down. This is perfect example of the liquidity. Now this was the medium one. Now most of the time we see reaction after we run medium liquidity node. So market finished its purpose, you know, it ran with the wick, the medium liquidity node, and we find the range. So the chances for you are already, like, you stopped out so many people, chances are you will be ranging or you will aggressively bounce and you can actually initiate new trend, yeah? But you are looking for this trade, definitely. Now, other commentary here, if market has no liquidity to cascade into, it also raises the chances we will stabilize. And again, another thing I was showing you before, if we actually damaged most of the people on the market, you are watching also open interest if it was squared out, yeah. If you did so, it's much more likely market will range, because what needs to happen? We need to gather more liquidity. The market makers will give us conditions, so we create liquidity for further cascading down moves. Yeah, and you see now market finally created like a decent like it's almost medium node with the size, and you see we started cascading again. Now we are going again. People tried to long again, so this was happening. I was scalping this live. These were really perfect bounces here. This was like local swing failure patterns. You are applying, you see what you are applying, symmetry and extension principles here as well. So you are watching what is the symmetry of the downside moves, is how is the big extension, is it like 1%, and you're also measuring with the balance zones. Yeah, was the next overextension 1-to-1 extension of the first move, or it was 1.5 of the balance zone. You're all watching this, and you're also watching how you are capturing all the liquidity. So this was really scalpable. Now from before, this was the you see how is going into the past, this liquidity node here. So not only you had the local liquidity from these people trying to long here, you see this node is not changing much, even as we are as we are going down to it. it's not changing colors as much. It's a older liquidity node which is waiting to be like fully run. Same thing as here. And this is the area where you become really defensive and you let the market cascade into this. We haven't as much limit orders in this area. Some were trying to stop it because they have guaranteed fill. Limit orders not only serve to initiate new positions, but so for example, people longing here with the liquidity tools, they see they will get very easy fill on their bigger positions from all these people getting liquidated from higher into them. So that's another thing you need to watch when you actually fill the liquidity node, what's going to happen. Yeah, and you see again, major pain was done and now market is ranging. So this is the area where you can be really defensive. Yeah, and you wait until you run the node, and then you can do more and better informed decision. It's better be defensive in these regions if you are still learning. And you see what happened. We were ranging a bit, but I was also saying in the group, we still have unfinished nodes below us, and this big node from before. So a lot of people from like weeks back will be stopped out and liquidated here. So what was market doing? Going sideways. You see the liquidity keeps growing. Now it's reaching a major liquidity. So even local and medium time frame people, they will create big downside pressures when we take out and go into this. And we went into down, and again you will see how liquidity plays out in front of your eyes, because the reaction is like, if you are listening to aggregate, you hear forced selling here from all the longs from before, and after it's done you hear like, if it's good and the market is creating swing failure pattern or wants to bounce, you see big inflows of positive delta coming in, new longs coming in, open interest is increasing. That's what we saw here. So it was perfect, and big traders filled positions. This was finished. Yeah, so we on the way down we actually did a lot of damage, and market took out 90% of the liquidity from people higher. This is now showing you how sooner or later, if you are too greedy with your positions, you will be stopped out. Unless you are positioned really well in the uptrend, for example, and the trend is continuing. But we initiated downtrend, and it was very likely these liquidity nodes will be run. And once market did this damage to most people, actually after this we found we did massive bounce here. And what we were again monitoring, we were monitoring this liquidity. We actually had scalps from this liquidity. Also, we are monitoring this liquidity and this liquidity, and the cycle goes over and over. So trading for you becomes really, really easy with the knowledge of the liquidity. So this was I was showing you. We also have you also have an option here to go to swing, and again check BTC USD tether swing. This is similar to hyblock, but I think hyblock is doing better job on medium to higher time frame liquidity. The swing section is calculating, of course, liquidity as well, but it's adding stop losses ratios as well, because these high time frames are focused more on people getting stopped out. It's more people, the bigger time frames, people get more responsible, and liquidity is, I would say, easier to trade on the smaller time frames. That's why I really love it for scalping. So this is really great. Again, swing trading option. You can see what was happening from before. You see how the week, look at this, yeah. So even if you are waiting, even if your strategy is to trade just the yellow and the red, so the largest liquidity nodes, you see how they gathered here. All the people shorting here actually created it, and you see the massive wick here, and we actually took out this major liquidity node, and then we started a pullback. Yes, so you see what is liquidity doing. It's giving you so many opportunities. Yeah, only after you learn liquidity you can look for nice trades. Same thing is happening to the upside. You see we are continue to damage the shorts. Yet again, there was not enough liquidity. This was run, there was no swing failure pattern, we continue to run. Now if we could do a bigger pullback, we'll be watching this node again on Tradingdifferent or hyblock, or even another thresholds here. Yeah, and this was the example I was showing you. Before in that, and I just wanted to show you a bit further here. So sometimes you have these very wide nodes, yes, which is like it's really showing you how what is worth for the market to move. Remember, market wants to move when we have enough liquidity to actually do it. So yeah, so market makers are creating conditions so we can build open interest. Yeah, we can lure people in, and then they move, and they will help us to overstretch the market. You see how here we had the green liquidity node. It was run. We stopped because the liquidity was not enough here. Now we took a bit of it. This was a bit harder, but it was still swing failure pattern, so perfectly fine. You took like 60% of the node, and you see market pushed up, but it was not finished with this liquidity. And finally, a bigger bounce, still great for the day trade after we finished the node. Yes, you better go around to the history and watch it for yourself. You see how these nodes I was showing you before, how they played out critical role when we reached them. So this tool is absolutely fantastic because if you have it like that on the current time frame, and you are not like zoomed too much, it's actually updating that data really fast. So I really love it for my scalping. It's updating data when the candle closes. You see what you can expect from the upside. If we get swing failure pattern, it's super likely it's gonna be from here when you take the red nodes, or just scalp you get. Yeah, you don't even need swing failure pattern. So you'll be looking for that. It's giving you opportunities. So you see on this 5-minute time frame when I'm scalping, it's loading fast. The downside of this tool is it's loading pretty slow on the bigger time frames. Or when you are zoomed out, like I'm on 5 minutes, but I'm zooming out trying to see the history, and it's taking a lot of time. So, but if you do something else and come back in 1 minute, it's gonna be loaded. 4 hour, it's loading pretty decent. All the recent price action. If you are a day trader, swing trader, and even a like spot holder, then this spot view is also important for you. And you know what's gonna happen when Bitcoin takes out this low. It's gonna be really crazy liquidations. From this point, we are building. So one day it can happen. We we trade what is in front of us, but you are prepared with this tool. So you are already it's part of your plan. It's part of your trading plan. All these liquidations. Yeah, this was textbook here. Even here, from this high time frame, you see market build enough liquidity and move, and took a lot of it. Took like 80% of it. Not all the time you take fully the node, but you did like maximum. You did a lot of damage already. Yeah. We stopped just right at where we had just green nodes. Yes, so you will see hundreds or thousands of trades with this tool from me, where it was major confluence. So make sure to watch our trades in the group, so you can learn and improve with this tool further. And if you have any questions, just write me, and I will happy to reply. And I hope I didn't forget anything in the video. So thank you for watching, guys. I hope you will have great usage of this tool, and I wish you good trading with it. One more thing, this tool has the Tradingdifferent. They have few more key things, but for me the liquidity is number one. I don't bother explore at the moment other tools, other parts of this. This is just great. This is what you need for liquidity. Thank you for watching, guys, and see you in the group. Bye.